Hi, welcome everyone. Abhinav, it is great to have you here today with us. And let me give our viewers a sense of your career trajectory because it's quite interesting. Abhinav has a experience of 17 years in the financial sector with a strong focus on infrastructure, construction, and capital goods sector. He joined Tata Mutual Fund in 2015 as a research analyst and has risen to the position of a fund manager. With that in mind, Abhinav, I'm curious to hear your thoughts on the NFO of Tata Nifty 500 Multicap Infrastructure 50-30-20 Index Fund. So let's start with the basics. So Abhinav, the NFO presentation mentions that the infrastructure in India is on a rise and there is a particular Lollapalooza effect behind it. Could you elaborate on what factors are contributing to this rise?
Sure, Milan, and thanks for having this interview with us. See, in terms of infrastructure, when you consider, and so what essentially it means is it means investments in the economy, right? So when we say infrastructure is getting constructed, it means that investments are happening in the economy. And today, after a long, long time, we are seeing that there are various factors which are coming together, and where we see that the infrastructure sector is set for a very, very long-term growth path. So, what are those factors? One is that we have our PM who has also elaborated that India that there is a goal of India being a developed nation by 2047. And if you want to be a developed nation, you need to have an infrastructure which matches that developed nation. So there is a clear focus from the government side on improving the infrastructure of the country. Second is if you look at the global dynamics today, there is a term which you must have seen, which you must have heard, which is China plus one. So what is China plus one essentially? It means that there are a lot of global manufacturing companies who have now decided to, let's say, diversify their manufacturing from China and move to other countries because of various factors like trade wars or maybe over dependence on a certain country. So they want to diversify. So India becomes an obvious option. So when these companies come and set up manufacturing factories here, it will mean that they will need the kind of infrastructure which they are used to. So today, if they are comparing India with China, they will want that India should at least have some comparison with Chinese infrastructure. And as we know that we are still lagging far behind. So that is another demand driver which is coming, and it's something which the government is also very well aware of. Thirdly, we are hearing a lot about Make in India. Like today, everybody wants, at least the Indian companies want more and more to make in India. So this also like kind of ties in with our second point, which is diversification of global supply chain. So anybody who is making in India, whether an Indian company or an overseas company, they want that infrastructure of the country should be such that the logistics costs, power costs, everything should be minimized so that their cost of production is lower. And when we have so much focus on Make in India right from the top, definitely the infrastructure demand is there. Last but not the least, so as to say, is there is a large global trend, or which I should rather say a mega trend towards sustainability. So when we say sustainability, it means that reduction in fossil fuel usage, increasing more and more renewable energy sources, electric mobility. So this is a long-term trend, and today almost all corporates, government of India, and even at an individual level, everybody is now focused on reducing their carbon footprint. But it will not come without investments. So you have to invest massively in green sources of energy. You have to invest in, let's say, green hydrogen, for example, which is something which is going to come up not today maybe, but over the next decade or so. So you see, all there are a lot of demand drivers which are coming together. At the other end of the spectrum, the infrastructure needs investments, and investments need money. So what was happening over the last, if you talk about the decade of 2010 to 2020, we had our private sector, it was going through a downturn in terms of leverage. So most of them had very high leverages. very high leverage. So what it meant was that their focus was not on doing investments. Their focus was more on reducing debt and utilizing their existing investments. But today, as we stand, our private sector is now deleveraged to a large extent, and the debt to equity of the private sector is among the lowest we have seen in the last 15 years. So they have got the funds to invest. Government on its side is focused on making the business environment easy. We have seen things like corporate tax rate cut, production linked incentives, which is another big driver for investments. So on the one hand, there is demand which is coming from various sides, like we discussed. And on the other hand, the funding is now also much easier because the private sector, as I said, is deleveraged. Government, on its part, is spending a lot on sectors like railways, roads, water. So everything has now come together, and we are on our way for a investment-led GDP growth, something which was maybe last visible in 2003 to 2008 period. I think we are at the cusp of something very similar today, and in my view, even on a much larger scale.
Okay, so interesting. So Abhinav, within the larger infrastructure sector, are there any particular pockets that you are bullish on?
So when we talk about infrastructure sector, there are a lot of various sub-sectors which are included. For example, the NFO which we are talking about, it covers around 13 basic industries and 33 sectors. So I am positive on almost all of them. It's not that any sector is doing better or worse than any other sector. But one sector which I am very excited about is the energy sector. And I think we also spoke about sustainability in the previous question. And I think any company which is exposed in this value chain is set for a change in fortune, or set for very positive long-term growth going forward.
Interesting. And typically now coming from an investor's point of view, given the long-term nature of infrastructure investments, then how do you balance near-term market volatility with the sector's potential?
See, balancing near-term market volatility is part of risk management, which as active fund managers we always do. So there are ways to do it. Either you diversify across sectors and across companies. So that is one way to do it. The other way to do it is to constantly reevaluate your positions, because once uh, a theme or a stock has worked for you, you will always look at what is the upside left, let's say, in that particular stock. And if you think there is any other theme or stock which is giving better risk reward at that point of time, you will shift. So that is something, that is how you manage near term volatility, and uh, and that's part and parcel of our job, right?
Got it. Got it. And finally, if you can throw some light on Tata Nifty 500 infrastructure, the 50, 30, 20 index fund.
Yeah, as I mentioned earlier, it's an index fund which will be focused on the infrastructure sector in the country. It's a multi-cap fund, which is basically investing in large, mid, and small cap stocks in the ratio of 50, 30, 20. All the stocks will be covered under the infrastructure sector. But within that space, there are around 13 basic industries and 33 sectors which this fund will cater to, or which this fund will cover.
Interesting. Thank you, Abhinav. Thank you so much for taking out time for this discussion.
Thank you, Millie.
All the best for the NFO.
Thanks.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.